Hello, hello, hello. Good afternoon, good morning, good evening to all our cherished listeners. Thank you for joining us once again. This is Sedat HR Digest. We come to you every Sunday from 4 p.m. and we discuss very pertinent issues for organizational and people growth. Today, we're going to look at a very interesting topic. But before I go there, let's acknowledge those who bring this to us and our sponsors. We have Quick Fix Creatives. For all your creative needs, you contact them on 055-209-0057. Quick Fix Creatives. You contact them on 055-209-0057. Then Sedat Consult. We bring you the HR Digest that we encourage you to share with your family, your friends, invite them, remind them, let them join us now to listen to today's issues. It's a platform where we discuss relevant people and organizational issues for personal growth and organizational growth. As HR persons, as CEOs, whoever you are, you would find something useful when you join us. So let us hear from you, those joining us around the globe. Let's know where you are joining us from. Put your name, your location in the comment, and we'll shout out to you. Today, we are going to be joined by, as usual, a very seasoned professional, and we are going to talk about finance for HR professionals. I know I'm an HR professional. I know how we struggle with our finances sometimes. But today we are going to change that narrative. We're going to have somebody walk us through financial statement, introduction to financial statement. I'm sure that means that we'll have a number, of opportunities with him again. So stay tuned. I will quickly introduce our seasoned professional and then we get started. Today we are going to do something very different. He's going to walk us through with some slides or some deck, and then eventually, whilst he's talking, please feel free to put in your questions. So as soon as he's done, we can ask him our questions. Great. So today we are going to be joined by Twenebua Kodria Boache. Twenebua Kodria Boache. He is an executive secretary of the Ghana Association of Savings and Loans Company. Mr. Kodria Boache is a chartered accountant and member of the Institute of Chartered Accountants Ghana. He's a certified expert in microfinance, Frankfurt, Germany. He has a BSc in engineering from the KNUST. He has an MBA, banking and finance from PGSM France. Awesome. He has 16 years banking and Microsoft practice, focused on regulatory compliance and financial management. So let's welcome Mr. Twenebua Kodria Boache to take us through. Hello, Mr. Boache. You're welcome. I think you are muted, and it's nice to meet you. If you can unmute yourself,
Yes.
we can hear.
Can you
Awesome.
hear me
Great.
now?
Yes, I can hear you.
Okay,
It's
that's
great to
great.
have you on. So today we are all set up for you. We are mainly or mostly HR professionals. We want to know what we need to know as HR professionals in the finance space. So I know you're going to walk us through the introduction to financial statements, and you're going to, you're going to walk us through some slides to be able to help us. So the floor is yours. You can just take us through now.
Okay. Thank you very much, and good afternoon to all your viewers. Good morning, good evening, wherever you are. And it's a privilege to join the team here to share some of the few things we've learned over the period in my interaction with HR professionals. You will realize that you are one of the brilliant people, but most often when you go to the boardroom, they look at those who present the figures because most often some of our people do not fully appreciate it. And so I will be sharing my slides for us to go through some of the key things that we can learn as professionals. So to start with, I don't know if you are able to see my screen. As we go through, we will be dealing with introduction, then look at uses of financial statement. What are some of the fundamentals that one needs to fully appreciate in going through a financial statement? Then we will now take our time to look at the various composition of a financial statement. When we say a financial statement, what is it? What makes up? Do the various financial components actually, do they have any relationship? We'll look at the relationship and some basic principles. Then we will wrap up and then take your comments, your questions to enable you to fully understand what we're doing. And so you are once again welcome, and take a ride with me as we share what we want to know. Somebody will ask, what is a financial statement to a business? What is a financial statement to a business? So we need to fully understand that a financial statement is simply all your financial transactions that has been put together into one word. And so we know a statement, and a statement should be meaningful. A statement should be something that is communicating to somebody else. And this communication that you are having with someone else, you are communicating your financials. Bear in mind that it is not only about the figures that speaks to the fact that you have a financial statement. You appreciate as we move along that there are certain things that speak louder than the figures that you will be seeing on a financial statement of any institution. And so most of our concerns will be as people practitioners, who are the users of this financial statement? We want to understand, is it only a few people or it goes beyond what we know? Then another thing that we are also bothered about as HR practitioners is, does profit really mean cash? When they say we made profit, does it mean we have more cash? Then the other thing that you look at is say that as an HR practitioner, as a manager, whatever you're doing in a business, when can I recommend for a pay rise? This is what most people will come to the HR manager and say, HR director, HR manager, HR officer, please, we want pay rise. You are going for negotiations. What do you look for? Is my institution actually doing the right investment? You can look at your financial statement to predict whether your institution is in good health or not. You can also look at it and say, why do I bother knowing the financial statement? Why do I bother? What it is about? Then you are also looking at another key thing to say, will my institution survive turbulence? Now we all know what's happening in the economy. You have economies in globally. The global economy is going through some challenging times and all these things. Wherever you are, will my business survive turbulence? You can look at your financial statement and look into the foreseeable future. Take note, we call it foreseeable future, depending on how the financial statement has been prepared. So take a ride with me. The first concern we are looking at, who are the users of financial statement? Who? If you are in a regulated environment, then your regulators are key in knowing what is happening. They are very, very critical about your position. Regulated business means that maybe your business, you take license before you do the business, which means you are in a regulated business like banking, insurance, capital market, asset, that's fund management license, pensions. You are into say advertising, you have your regulators. You are into manufacturing, there are regulatory bodies that look at what you do, and all these things. Any business that you need license to do, your regulators are important. They want to look at it. Your shareholders, those who put money in the business, they want to know what is happening as to whether to invest more or they will have to exit. The management is very important. They want to look at what the financial statement, what is the position, what is the health of the institution. Investors are also very key, because when somebody want to invest into your business or will want to even donate, make some donation to your business, you need to be able to speak to it and say that this is my position. So as an HR practitioner, your customers are not happy because they are thinking that you have gone to buy government bonds. What are the things you need to look at to be able to communicate to them, your customers, the government itself, so that they can know whether to tax you or the kind of things you have spent on and all those things? Consultants are very interested. For instance, you're a consultant, you consult for a particular company. You want to look at how they are going about the business, the kind of strength they have, the shortfalls, and all these things. You can look at it. The registrar of companies, you need to file your accounts every year. Bankers, creditors, the general public, researchers, some employees, whether or not I have to continue to work within this company, I'll have to look at the financials, or whether or not I'll have to look for another job. Your network or associations that you join, maybe Advertisers Association, Manufacturers Association, pharmaceutical companies association, banking association, insurance association, even your competitors, they all need to look at it. And so your financial statement is very key, so that as a professional, you need to understand what it is about. Now, every financial statement that we're talking about present these three basic things. What is my financial performance? So it is about my performance. So when you go to the boardroom and you say that we need to employ more people, and the board says that, or the director says that you are not performing, you need to understand why they say you are not performing. On the other hand, they may be saying you are not performing, but your understanding of the figures will help you to say, no, we are performing. Then you justify your position. It also tells somebody your position at any point in time. What is your financial position? Are you at ground zero or negative, or you are ground 50%? It also speaks to your cash flows, how cash is moving in and out of your business. Take note, we said cash flow, the movement of cash. Sometimes there are certain monies you pay today, but they do not relate to today's transaction. there are certain monies you will receive today that they don't relate to today's transaction. It may be last year transaction that you are now receiving the money. So your cash flows are also very important. So let's look at it. These two pictures that you see, picture A and picture B. Let me ask you, what is the person in picture A doing? Think about it. What is the person in picture A doing? Look at picture B. What is the person in picture B also doing? You can type your comment. You can type. You go to the comment chat and say A is doing this, B is doing this. And I would love to hear it. I would love to see it. When I asked somebody, he said that, okay, somebody said, oh, picture A is laughing. Picture B, what about picture B? Picture B is crying or he's sad. Okay. So this is a picture. We call it snapshot. At that particular moment, this is what you see. But let's watch some short video to understand what is happening within the two. So we want to watch.
Voy a la playa, ya subió la marea. Y al último que cuando ya salió la bien de regla, estaba llorando. Voy a la playa, ya subió la marea. No vea, a Sevilla. Y al último que cuando ya salió la bien de regla, estaba llorando. Me cobró el la Voy a la playa ya subiendo la marea. ¿Y tú? Eso no te lo he contado yo a ti en el programa. Te he contado lo de cuando... ¡Llegaba la motorrita! ¡Había subido la marea!
Okay. I hope you now understand what picture A is doing and what picture B is doing. All right. So when you look at both, you may be thinking that picture A is laughing and picture B is crying, but it's in the same place where picture A is laughing, which triggered picture B to also laugh. So both were laughing, but when you look at it as a snapshot, like as a picture, you may be having a different picture, having a different understanding. This is what financial statement is about. And therefore, there are two types of financial statement. One gives you the position at the time, a shot, a picture, a photo. You click, you the shot, and then that is what you see. If the person is raising the hand, you know what it's doing. Then we have also the video. Then the video is telling you what exactly happened. And so financial statements tells you what happened to arrive at where we are. So we're going to go through one. We have statement of financial position, or most people call it balance sheets. Mind you, I said that we are dealing with financial statements. So these statements have different components. The one is financial position. So we call it statement of financial position. The second one is statement of comprehensive income or profit and loss account. Then we have cash flow statement. Then the money you put into the business, how is it changing? We call it statement of changes in equity. Then notes to the financial statement. Please, anytime you read any financial statement, pay attention to the notes. It is the notes that will tell you what constituted it. Sometimes you read a financial statement, you see note 1, 5, 10 attached to the figures. Those are the notes. Go and look for them. Then we have other non-financial data, the commentary on it. All these things, you can prepare them from a series of transactions called trial balance. What is a trial balance? It's simply the fact that your transactions you are posting, you are getting some money, you are paying some money, you are spending, somebody is giving you some money. All these transactions and all the things you do, we categorize them into credits and debits, or debits and credits. So in accounting, we say to every debit, there is a credit. So when we reduce one, we increase the other, or reduce one, reduce another, or increase one, increase another. So when you prepare a good financial statement, it should balance. And that is why we call it the trial balance. Now, this is how it looks like. So you post the transaction, then the transaction that is posted, they will record it that you paid in this money, and then you pay 2,000 into the business. So you have a capital of 2,000. Where is this money? It is in the bank, or it is cash I am holding. When they post it into the debit and credit ledgers, then they will, at the end of the day, what is the balance? What is the closing balances on the debit and the credit side? That is what we call the trial balance. This is what we use to prepare the financial statement. So let's now take the financial statements one by one. But before then, I want you to understand certain principles. There is the basic accounting equation. The basic accounting equation is that when you start your business, you start with your capital, your own money. So your own money is what we call capital. When your own money, sometimes it may not be even your physical money, but you look at it that you have some knowledge. But because we are dealing with financial, you quantify that one. This is what you have put in. And therefore, the money you have in your hand, you acquire an asset. You acquire something to start the business with. So when you start your business, your capital will be equal to your assets. As time moves on, you will take other people's money, add it to your capital to grow your assets. This is what we call liabilities. Why do we call it liabilities? Because you will pay back. You will pay somebody. Some of the liabilities we will learn later to understand the composition of what capital is and what liability is. as you move along, your capital can erode. If you are making losses, the capital in the business can become zero. So when your capital is eroded, then it means that your assets is now equal to your liabilities. But if you don't stop and you continue to generate more liabilities, a time will come when your liabilities will be more than your assets. So when your liabilities are more than your assets, which means that what other people have, what you took from other people into the business is now more than what the business itself has. So which means the asset is less than your liabilities. When you get to this point, we say the business is insolvent. The business is not a going concern. When we say the business is going concern, you have heard this word over and over some places. It means that the business cannot continue to operate. Why? Because what you owe other people is becoming larger and larger more than your asset. So when you become insolvent, then you need to fold up. If you are a regulated business, your regulator will likely revoke your license. Now, having understood it this way, let's look at it. We now understand what an asset is. We now understand what a capital is, what you contributed into the business. We now understand what liabilities are. That is what you took from your creditors, what you borrowed from other places. Sometimes too, your business will take facilities on credit, take goods on credit, and they don't pay it. If you don't pay it, you take it on credit, you have to factor it that it is come to add to your liabilities. Therefore, from where we have gotten to, anytime you are doing a business, your assets is being financed by your liabilities and your capital. Where your capital goes down, it means you are going into trouble. So the first thing that investors will look at, they will look at the balance sheet, the financial position of the business. Does the shareholder still have money within the business? And what is the percentage of the shareholders' money within the business? Now, this man need to balance. If you have seen people who walk on ropes before, you will realize that they use the stake in their hands to get a balance. So the business needs to balance. How do you balance? Because we want to see where we are, we take a stock. And that is what we call the financial position, statement of financial position. It's a stock statement. It could be done daily. It could be done weekly. It could be done monthly, quarterly, or annually. Again, it summarizes all your assets. So now I'm focusing more on the statement of financial position. It summarizes all your assets, what the institution owns or what you have. It summarizes all your liability, what you owe. It also summarizes your capital or your equity. The equity can come from your stated capital. It can be your own funds, for instance, NGOs or non-governmental organizations or companies that are limited by guarantee. They don't pay any stated capital. And so they call it accumulated funds. What you have done, your surpluses, your profits, we call it retained earnings. When you put all of them together, because it's your own money. When you make profit, it's your money. When you make a loss, we have to first subtract it from your own money. And that is why when a company makes losses, their shareholding value goes down. But if you make profit, make more excesses, more surpluses, then your value goes up. So, what are some of the examples of the assets? Please take note. Depending on the type of your institution, whether it's a manufacturing, whether it's a banking business, it is a consultancy business, it is about services, depending, it may be a construction company. The particular type of company will determine the kind of assets that you will hold. So when you read any particular financial statement, from one kind of business to the other, they may be different in terms of the major assets they have. If you are in a banking business, then loans is a key asset that you cannot forgo. If you construct buildings to sell, the property you have constructed, you have its value, and that become a huge asset. If you are into manufacturing, we have what we call inventories. Those inventories, the raw materials, are key assets. That is what you own. Then we have other common assets. We call it property, plant, and equipment, like your computers, your motor vehicle, your office equipment, and all those things. Then we have cash and your bank balance, what you are holding and what's in at the bank. You have prepayments. What are prepayments? When you go to the asset side, you see that you have paid your rent in advance. Those rent you have paid in advance is for, say, 5 years. So you will draw them down small. So those you have not utilized, you call it prepayment, pre-finance. Or in some institutions, you call them receivables. For instance, you have sold some goods, or you have done something to people, they need to pay you. So long as you have sold, the money should have come. But because it has not come yet, you put it there as receivable, to receive, because it is your asset. Let's look at liabilities. So we are going to the other side of the equation. Liabilities are the things you owe, your debt. You need to pay. Loans you have taken, borrowings you have made. If you owe tax, sometimes at the end of the year, you are supposed to pay a tax of, say, 1 million, but you have paid only 700,000. It's left with 300. That 300 is a liability. So we have another one called payables or accruals. These are terms, but what it means is that this one you have enjoyed it. You have enjoyed the services. Maybe staff have, or the employees have worked. You were supposed to pay their salary. You're supposed to pay them some commission. You're supposed to pay them some money, clothing allowance. The time has come. You are supposed to pay. You have not paid still. It means you are owing them. We accrue them. It is payable. At the end of the month, we are supposed to pay taxes to GRA, PAYEs, or pensions. But you have not paid it at the end of the month. So we put it there as payables. Go to the equity. We have mentioned what equity is about, or shareholder funds. Call it accumulated funds. Please take note. All these things too, it depends on the kind of institution you have. Some of them you will not see retained earning. You see surplus, or you see profit, accumulated profits or accumulated earnings. Not everyone you will see stated capital. Some of them you will not see stated capital. Reserves normally are to absorb shocks in the event of eventualities. Again, when they revalue some assets, they put it here. So when you look at your reserve, ask what makes up these reserves. What I want you to pay attention here is that, take note please, is that anytime you see a financial statement, sometimes how they have arranged it will differ from one to the other. And I want us to take an example. Let's be practical here. This is a balance sheet for a banking business. A banking business. You can zoom your screen so that you can see the figures well. When you zoom your screen, it's divided into A and B. The A part is the assets. A banking business, its total asset is 1.9 million. You look at it that their loans and advances is 1.7 million, because that is their main business. They have cash and bank balance. Then you have other assets. Other assets can be that people who should have paid, or prepayments that you have made, rent advance, all those things. You have seen the property, plant and equipment, and you have seen intangible assets. This business, it doesn't have the intangible asset, it doesn't have anything. But most often you see them there as a banking business. What are some of them? Your software you are using, your banking software. We can't touch it. That's why we call it intangible. So when you see any business, now over here, you will see that they have arranged it in a particular order. It starts from cash to the loan to the property, plant, equipment, and the intangible assets. What they have done is that they started from the ones that can easily be converted to cash. We call it cash or near cash. We call it those that is most liquid. So when you arrange it in the order like this, it means that you pay attention to liquidity. You pay attention to cash. When you go down, first we will look at what is at the top. Then you come to what is following, the loans, before we can look at your vehicle, your building, or those other things. As for your software, who will use your software? So in the order of importance, so a banking balance sheet will start from what is most important in banking. Cash is very important. A bank can make losses, but if their cash is good, you will be okay, even though eventually it will run at them. Then the rest, you see the capital at B, it has the shareholders, paid up capital, then the reserves. This reserve you see is that their capital is 1.1 million. What they have paid. When we say paid up capital, it means that this is shareholders' money they put into the business to start the business or to do the business. So that one is what we call the shareholders' paid up capital. Then you have the reserves. This reserve is negative. When you see it in bracket, it means it's negative. So when this one continues, it means all the capital will go to zero. Then what they owe other people is the borrowings and deposit from public. Let's take another business, a manufacturing business. Sawaba is a company in Ghana. In 2017, this was their balance sheet. This is a manufacturing business. You see that they have arranged their assets differently from the banking. This, in manufacturing, they normally will start with non-current asset. When we say non-current asset, it means that an asset that will be used more beyond 1 year. An asset that will be used beyond 1 year. It means we will benefit from it beyond 1 year. So like your vehicle, your buildings, and your land, and all those things. Then we come to current asset. Current assets are the things you are using to turn out the business, like your raw materials. We can use all raw materials today. What people owe you, your trade receivables. You see, I mentioned receivables, and then to cash. So if you look at this arrangement, it started from the most hard one to the soft one. Unlike the previous one, it starts from cash to PPE. But manufacturing, it starts from PPE, non-current asset, and comes to current asset. Take another notice as well here. If you look on top of where the Ghana cedi is, under Sawaba, you will see Ghana cedi 000. Enugu, you see Naira 000. This one is to tell you that any figure you see here, add 000 to it. Sometimes you will see M. It means that the figures there are in millions. If you see BN, it means it's in billions, depending on your size of the business. Now, let's move on straight to the next statement. The next statement is your income statement. It summarizes your inflow, your revenue, and your expenditure. What goes into the revenue? Call your income. Sales, you have sold. Your interest you have gotten. Maybe you gave loans or you did investment. If you're an insurance company, your premium that you have earned, fees, penalties you have charged your customers, or their registration. Then your expenditure line could be your cost of sales. When we say cost of sales, the items you have used to produce the goods. How much did you use? If you're a banking business, your interest expense, provision for losses, and other expenses. One of the key things is personnel cost or staff salary and transportation. This is an example of a manufacturing company income statement. So you see, we have revenue or the sales, cost of sales will come, then we less it, we got gross profit. The gross profit is a key indicator. Maybe one day when we come to how to analyze, we will be able to analyze a financial statement to understand it well. Then distribution and administrative expense. Then if you got other income, you can add it. This one is also from an insurance company. Your premium. Did you insure with other place? What is the net? Then investment and other income. Then you take commissions. So you see, insurance, payment of commission is recognized. But the others, you didn't see it. So the revenue in a banking business is interest income. Revenue in a pension, an insurance business is a gross premium. Revenue in a manufacturing is sales. So it depends on what kind of business you have. Let's now also look at your cash movement. So how cash is moving in and out of the business is what we call cash flow. It can increase, it can reduce. The cash flow statement is divided into three: your operating activities, then your investing activities, then your financing activities. What is in the operating activities is the core business. If you need money to invest in the business, then you need to invest. If you need money, you need to finance it. At the end of the day, pay attention to the last figure there, what we call the cash flow, the result. We call it free cash flow. If every year you are making negative cash flow, it means the business lack cash. You can't request for increment in salary. If the cash is difficult, you can make profits, but still your cash will be negative. Why? Because we have something we call accrual. The salespeople have sold the building, but the people have not paid. So we will record that we have sold, but they have not paid. So we will record that it is a receivable. Because they have not paid, we don't have cash, so we cannot pay salary. So sometimes people think that, why is it that they say we are making profit, but our salaries delay? Or we are spending more money, but they say we are making losses. You may have the cash, but your profit and loss account can be negative. The next thing I want you to pay attention is your notes to the financial statement. Notes to financial statement. After all these statements, continue reading the financial statement. You see them notes. They have numbered it. It gives details to everything that has happened. Let's now look at the relationship between the financial statement. You can take a screenshot of this and study it. Last year balance sheet, this year balance sheet, the changes you see is what goes into cash flow. Last year, this year balance sheet, our profit or loss, whatever we will make, goes into our balance sheet. So it has huge relationship. The last thing I want to talk about is, as we go through all these things, there are principles. There are principles. Everyone who is preparing a financial statement should make sure that the right disclosures are made. Now, for proper governance, and as HR people, we are interested in corporate governance. They need to disclose as to how much they pay the directors, how much they paid auditors, as to whether we are complying with environmental issues. The board will have to state all these things. So proper disclosures in the financial statement. The auditors will have to insist that they do these things. Some of the assumptions they make is that we call it accrual basis. If I have sold, whether you have paid or not paid, I should recognize it. So long as the month has ended, whether we have paid the salary or not, we owe employees. When they say go for the training and they give you approval to go for the training, it means they owe you accrual. Then going concern, when they prepare the financial statement, go and look at the going concern statement. If they put there that we have prepared this with the assumption that the business is a going concern, it means they say that the business will continue to operate within the foreseeable future. Consistency is key. Then materiality, the period or the timing of the account, and then we have what we call accounting entity concepts. These are some of the few things that they pay attention. If you don't understand, don't worry. Now you know. You can Google them or attend some of the trainings that SEDAT Consult organize. SEDAT Consult organize training that they will go into these things to fully understand. SEDAT Consult organize training on budgets, how you yourself, you can even prepare your own budget for your department. When they are preparing the financial statement, and your understanding will help you to contribute meaningfully. When they say we have made profit, but there is no cash, now you understand. When they say that we are not making profit, we are making losses, you know where to pay attention to. Thank you very much. I want to pause here so that if there are any questions, we can take them. Madam Vera, you can take over.
Hello. Wow.
Yeah, hello.
This is awesome. This is so deep. You've taken us deep into areas where I'm sure most people were probably, wondering, have we always been HR professionals thinking that we know some finance? Thank you so much. Thank you so much. We have a few people who have joined us. Um, we have Harim Adams. He says, hello, Joyce Adogma Bugri. We have Mr. Kisi, as usual, for watching us from Cape Coast. We have Amma Pretty. Nanama W. Quarantine. We have Rita Amma Langma. We have Josephine Aqua, who joined us. They all commented on the video. Because of time, I don't want to go into it. We have Cynthia Awa. SEDAT HR Digest. Okay, it was just prompting you to drop your questions. Daniel Insabua Amwam, hope I got the name right. He says cash flow, the movement of money. I'm sure that is something that he picked. And Cynthia Awa has a question. She says that what are impairments? What are impairments? So if you could please help us with that, Mr. Kodiabuachi.
Thank you very much. When we talk about impairment is you will take money out of your business. For instance, you have bought some land. For instance, you have bought government bonds. Whatever investment or whatever you have bought, now you bought it 10,000. Now, at the end of the year, you want to look at the value of what you have bought. When you value it, if you are to go to the market and sell that same thing, will you get 10,000? If that money, that land you have bought, now people have come to dump things there and say that the value of that land has gone down, it means that that land has been impaired. So impairment is a financial provision that we make on the possible loss that we would have made if we are to sell whatever we have. Banks give loans, people default. And so when they default, it means that the loans you have given out will be impaired. If you give government money, you buy bonds, treasury bill, at the end of the year, government say, I can't pay you all your money. Dash me some. It means that you will not get the 1 million you bought. You will lose something. So impairment is the financial loss if you are to sell that same thing you bought on the open market. This is just a general, ordinary explanation so that we don't go very technical.
Right. Okay. Sorry, my microphone was muted. Thank you so much, Mr. Kodiabuachi. We have another question. It says that, so how do you remember, how do you determine the percentage of staff costs to the overall financial statement? How do you determine the percentage of staff costs to the overall financial statement?
Thank you very much. Some of the financial statements, you will see the employee costs. Some of the financial statement, you will see the employee cost. In that case, take that employee cost. If you want to determine employee cost to total revenue, you want to see how much you are spending on employees to the revenue that has been generated, then employee cost divided it by the total revenue. Sometimes too, you want to check the employee cost to total cost. So you take the employee cost divided by operational expenses or total expense. Sometimes the financial statement, that is the income statement, that is where we will see the expenditures. Sometimes you will not see it on the face of the income statement unless you go into the notes. So you go to the notes and then you go and look for staff cost or personnel expenditure. Then take that figure and divide it by whatever you want to show. So this is a simple way you can determine. You can check it quarterly and say first quarter staff expenditure divided by revenue was 40%. Second quarter staff expenditure divided by revenue was 38%, which means that you are getting value from employees. The higher the expenditure or the ratio, the higher the figures you get when you do the division, it means you are less efficient. You are not generating enough revenue with the staff you have or what you are spending on employees. Thank you.
Right. Thank you. Wow. I this is recorded, so I'm sure that everybody must go back and listen if you really want to make this. And I think that, like Mr. Kodiabuachi said that HR Consult organizes training from time to time on budgeting, financial for HR professionals, and so on and so forth. And so this is to tell you that if this is just the webinar, 45 minutes, and you can get this much, can you imagine if you come for a 2-day, a 3-day program with Sedat Consult? It would be something else. You are going to make strides as an HR professionals. I have a last question and then we'll round up because our time is fast spent. Hill Ann says that what is the appropriate percentage of staff cost against total expenditure? What is the appropriate percentage of staff cost against total expenditure? Mr. Chunipo Akodia.
Okay, thank you very much. This is dependent largely on one, the industry you operate in. Number two, it also depends on the focus of the business. Why am I saying so? If you take a consulting business or a training company, the asset they have is not the vehicles or the buildings or those things, but the asset the company have is the consultants or the personnel that they have, a consulting business. And therefore, at the end of the period, they need to spend more on the employees. And so a business of such nature can spend about 70% on personnel. For instance, if you are also a virtual company, you operate virtually, which means you will not be paying rent. You will be buying platforms, so your IT cost will be a bit higher. And so what our advice is that the best yardstick is look at your industry. If you belong to an association, you can approach your association to give you the average staff cost to total expenditure. These are some of the things that will help you. If you are a construction and manufacturing company, you will be spending more on raw materials than on staff cost. Thank you.
Right. I think at this rate, we are moving from just a webinar, we are moving into consultancy. But anyway, I said it was the last question, but let's move on. So it's asking, as HR professionals, what should be our main focus? What should be our main focus?
Okay, thank you very much. So our main focus is what I stated from the beginning. One is cash profit. Look at one, the profitability of the business. Two, look at your cash flow. If you have cash, then it means that they can continue to pay you. They can continue to hire more people. Three, look at the revenue stream. Where are we getting our revenues from? Do we need to diversify? Do we need to get more people? Do we need to cut down people? I remember a particular company during COVID, they had to lay off certain people and they became more profitable. Since then, they have not called back the people because they could still work without the people. Again, look at where your investments are, your assets. What constitute the majority of your assets as an HR practitioner? Because if the majority of your asset is invested in some investment or instruments that are very risky, then it means your business is sitting on a time bomb. Maybe the last one I want to add, if your business is a regulated business, ask where my business is putting the money. Is it allowed by my regulator? Because if you don't, and your business is investing in something that is not allowed, you'll be making the profits, but your license will be revoked. So these are some of the few areas: your cash flow, your bottom line, and then where your investments are all very key. Thank you.
Okay. Nice. Right, Mr. Tinubu Akodia, in your first statement, in your just ended statement, you said that where my business is putting the money, is it allowed by the regulator? So in a case where it is not allowed, as HR professional, what can you do? What must you do?
So this is where you go for management meeting, and then so you're able to raise it during management because you are now understand that you need to pay attention. So you can explain. If the person says that, oh, we have gone to buy fixed deposit in TK Bank, if you are not sure, you can ask the finance manager to share a copy of the certificate that shows that we have gone to buy that one. What if the CFO has gone to invest the money in his personal business and it's put there that he has invested in TK Bank? Which means when your company is in difficulties, you will not be able to get the money. Sometimes too, if they have gone to buy land, you are not supposed to buy land, but you have used the money to go and buy land. Now you need money to buy raw materials. It's difficult to sell land, and therefore you'll not be able to buy the raw materials. So these are some of the things to ask questions. But don't go prove that you now know everything. Just go with a learning heart.
Right. Okay. So, one of the things that as HR professionals and account, you realize that there's almost always a rift or something of the sort between HRs and finance team. And some of the issues are that the first cost cutting measures that are put in place is training, cut training or redundancy. And so the human beings are always at the would I say receiving end. Why is that so, and what should we do to change that narrative?
This is very key. One, it is dependent on the philosophy of the business. I know a banking institution in Ghana that every year their training budget is rather increased. Even in the midst of COVID, they did not cut down their training budget because they believe that a well-trained business people, well-trained employees will give you the value. So to answer it briefly, I would say most often it depends on the philosophy of the business and how we position the business and the contribution we also make to the business. Because in any case, when they say that we need to employ new sales manager, this sales manager who is coming, does he understand our psychology? You need to train the person. And so going forward, let's understand. If we understand, we'll be able to speak meaningfully when we come to the table. Thank you.
Yeah, thank you. Cynthia Awa says, thank you, sir. Bawa Masood says, thank you for a very fruitful presentation. Yes, it is very fruitful indeed. One last one, okay, and then we round up. Now, some organizations would actually um, run the budgets. Maybe every department run their budget central. Either sometimes it's centralized, other times it is centralized. Which one is best, and why should we do it the way that we do it?
I want to be very clear on the question. You said,
Right. So some organizations will say that every department owns their budget and they run the budget by themselves. They just kind of retire to finance. Other department will say every budget is being run from the finance department. So you have to go and justify and do all of that at any point in time when you have to run any program or activity for a department and so on and so forth. But with others, probably at the beginning of the year, every department has their budget already allocated to them. And so they run from that point. Out of the two, budget being run from finance, okay, so finance holds everything. You must always go and justify before you get anything done. Then where the department has already been given their allocation for the year, so they know all they have to do is to account for it and return to account. Of these two, which one would you recommend that is best for running an organization, and why?
okay, thank you very much.
Right.
Any of them have its own, has its own ups and downs, depending on the liquidity constraint of the business. Two, how controls are also managed within the business. The other side is also who takes the decisions. I wouldn't rate one over the other. However, you will realize that where you have a centralized budget, the head knows exactly what is happening at any point in time. And therefore, they want you to spend within the approved plan. But if they decentralize it also, depending on the line of authority, that will tell whether or not that will be efficient. Because if it's decentralized and somebody finish their funds and another unit is also in need of funds, what do we do? So both of them have their own ups and downs. But if we are to do a training on budgeting, which Sedat is good at, has been organizing a training, budgeting for HR professionals. When you go through that model, for instance, you will appreciate these things. And I saw that somebody is asking about even why do we have differences in different expenditure as against actual.
Yes, I was going to
Having
come
these
to that.
differences is actually a budgeting technique. And I will encourage you, Bawa, to look for one of these trainings that Sedat runs and attend some of them, because you are going to be given a tool that will help you even yourself to develop your own budget. And even if you understand what goes on in budgeting, you'll be able to now say some when management meets. You'll be able to advise and say, can we look at it this way? Every business owner is looking at value. So the more valuable you become, the more your worth also will be in the business. Thank you.
Thank you. I think finally we've come to the end of it. So if you understand budgeting, you would also be able to say some. When you go to the boardroom, when you go to that table, management meeting, you'll be able to say something that makes you, look valuable, that makes you bring value to the table as an HR professional. Thank you so much. Josephine Aqua says very refreshing. Yes, I can, but I agree with you. That has been a very refreshing time. Mr. Achunibu Akodia, maybe you want to say your last words and then we'll bring it to a close. Yeah.
So I want to say a very big thank you, everyone who has taken the time to join us, Sedat Consult today. As you know, Sedat is in to support businesses survive and grow. One of the key things that I will want to encourage you to do is take your own institution's financial statement for the past 2 years, 3 years, 4 years. Look at the line one by one. If it is revenue, look at it one by one. If it is about expenditure, look at it one by one. Your cash every year, is your cash going up or the cash keeps on depleting? Your cash flow, is it doing well or not doing well? I will encourage you that this should not be the end. Keep on adding value to yourself and we will meet again. Thank you very much.
Thank you, thank you, thank you. I must say it's a great presentation. Thank you. Right, so this brings us to the end of today's HR Digest. We meet again next week, Sunday at 4 p.m., and we're going to look at another awesome issue that would help you in your professional journey. Don't miss it. Always remember to invite family and friends. Remind them to be here to learn as well. Sharing is caring, and you cannot afford to just learn alone. Make sure that your family and friends are also getting the best of HR Digest. We never disappoint, So let's see you again Sunday. And don't forget, always reach out to Quick Fix Creatives and also Sedat HR for all your consultancy needs and your creative needs. Thank you. Have a wonderful week. Catch you again next week. Bye-bye.